Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that with market price volatility and just about everything, we have seen some unprecedented leaps before market forces have steadied. First up, the United States has banned imports of oil, natural gas and coal from Russia. This has shifted the international market price signals dramatically in the past few hours. At the same time, they are releasing significant flows of their own strategic oil reserves, ramping up domestic production and using this shift to encourage a transition away from fossil fuels. It is a very brave move because there's probably no domestic political upside from this in terms of the short-term inflation at least. And the EU is ending its reliance on Russian gas as more countries in the region rally to harden their response to the invasion of Ukraine, even at severe cost to themselves. But China is objecting to political bans on Russian trade. The Europeans are ignoring their advice, and the Russians are warning of $300 a barrel oil, but that has just been seen as propaganda. Even the Venezuelans are turning away from Russia. In the US, American consumer debt rose at a much slower rate in January than was expected, up at an annualised rate of just 1.9% to $4.4 trillion. November rose 10.8% and December 6.1%, so the January miss will involve almost $15 billion. Primarily, the low level was caused by Americans shrinking their credit card debt. And Japan's current account slipped into a larger deficit as the cost of imports far exceeded their exports in the fourth quarter of 2021. It was their largest deficit since 2014 and their second largest deficit ever. They normally post surpluses. And China is making a show of supporting Russia in diplomatic circles that mirrors similar popular support on Chinese social media. But deep within the Beijing bureaucracy, level heads are still in charge, keeping their options open. China is no longer recognising Russian letters of credit drawn up for commodity trades. That is not an insignificant action, and Chinese banks are trying to avoid secondary sanctions. And you might think that the sharp rise in commodity prices isn't news anymore. We all know that. But the action has still been spectacular. The LME cancelled trading in nickel after the price soared over $100,000 a tonne, the most extraordinary rise in the 145-year history of the exchange. In Australia, the NAB Business Confidence Index jumped in February and January revised up. This February result is the highest reading in 4 months, which was way above their long-term average. Last week, a major rainstorm hit New South Wales but missed Sydney. This week, it has hit the city in full force. Major flooding is extensive and will have wide economic repercussions. And the US Treasury 10-year yield opens today at 1.87% and up 14 basis points from this time yesterday. And the price of gold is now at $2,021 an ounce for a net $42 rise. And oil prices are up very sharply today, up by $7 a barrel. In the US, they're now just under $120 a barrel, and the international price is $126 a barrel. Just after the announcements, they spiked much higher, but are settling back now. And the Kiwi dollar will open today, little change, at just over 68.3 US cents. Against the Australian dollar, we're at 93.7 Australian cents, which is up more than half a cent. Against the euro, we're at 62.3 euro cents and a little lower. That all means our trade weighted index starts today at just on 73.4 and little net change from this time yesterday. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.